Is it always better to pay less in taxes? One of the biggest reasons or benefits that most people talk about in the 1099 world is the notion, the idea that as 1099, you're paying less taxes. You can get your tax bill way down. You can almost eliminate your tax bill. I talk to a lot of 1099 people that are like, man, I don't, I write off, everything. So I'm not even paying much in taxes. Okay. This is true. Okay. As a 1099, when you compare it to a W-2, you have more control over your taxes. As a W-2, all of your deductions are going to come out of your check before you even see it. As W-2, you essentially get to spend your money, some of it anyway, and then you're taxed on what's left. Okay. You're gonna not be taxed on whatever you spend in your business. Okay. And so if you're spending a lot of money that you're making back on your endeavor, whatever it is that you're doing, that's the money that you're not going to be taxed on. All right. Everybody understands that, I think. Here's the part that I want to address right here. The question is it always that I want to answer here is it always better to pay less in taxes? Now, I just bought a house. I just bought my first home, me and my wife, about 6 or 7 months ago. All right. And not interesting, the obvious thing is, in order for us to be able to buy this house and qualify for a loan, because my wife is a W-2, I had to be able to show income and profit. I had to be able to show stability. Okay. So here's what that means. Whenever I hear a person say, or just throw it out there without throwing out the other side of it, that with 1099, man, and I'm not really paying much in taxes. What that actually means is you don't have much taxable income. That should make sense to everybody here, whether you're W-2 or 1099. If you're reducing your tax bill, that means that you're reducing how much taxable income you have. The problem is when you show up to try to get a loan. So I guess just to make it as short as I can, as sweet as I can, and direct as I can, if you're going to go to the IRS on one note and say, I'm not making enough to be taxed, you might be making it difficult for yourself to show up to the car dealership or to show up to a mortgage broker and say, I want a house and I can afford ... Okay. Like that's what Donald Trump is under investigation for right now in New York. I believe, like valuing his assets at one thing for the purposes of taxes, and valuing his assets or his income or how much money he makes. That's really all we're talking about. At another thing for the purposes of getting a loan. So when you tell the IRS on one hand that you're not making enough money to pay taxes, meaning you lowered your tax bill so much that you don't owe much in taxes, it may make it difficult for you to go out and get financed for something. Now, I've been in trucking for 7 years. I've been self-employed most of my adult life. I have tried to get a mortgage before based on strictly my self-employment income. For 5 years that I drove for my dad, I was just a driver of the truck. I wasn't the owner of the truck. So my gross income increased with me being the owner of the truck. But as a driver for my dad, if he would have been paying me W-2, the same income that he was paying me as 1099, it would have been easier for me to get approved for this house with that same income as W-2. As 1099, you got to show profit. Okay. You got to show stability. You got to have 2 years tax returns. And the reason it's a little bit more difficult to get approved for something like a home with self-employment income is because the fact of the matter is self-employment income is considered less stable. You are potentially considered to be a less stable individual when you are 1099. Okay. So I guess, again, just to be clear, the problem with your 1099 and you're lowering your tax bill so much so that you don't pay much in taxes, for me, that created a problem on the other end of wanting to buy a house. Okay. So for the individual that may be looking at buying a home in the next few years, you're going to have to provide 2, maybe even 3, depending on the lender that you go with, 3 years of tax returns with your self-employment income. And it can't just show income. In other words, it can't show that you made 100,000 1099 and you're writing off 75,000 and you're only left with 25,000. Sure, on like you may not, you may be doing better than that physically, but on paper, that's what it looks like. And that's what your loan is going to be based on, your taxable income. Okay. So like, I don't know about the individual that, because I've had people tell me before, you know, if you're operating as 1099, you're self-employed, you can lower your tax bill by writing off all of the things that that's expenses, or all of the money that you're spending that's going back into your business. So the question comes in to the individual that's thinking, well, what if I'm spending my money on things that are increasing my income, or my net worth, I should say, or my ability to make more money? Like, what if I'm spending my income on another truck or something to that matter? So I guess what I'm saying is, what if you're the type of individual that you don't have much taxable income, but that's because you've been acquiring assets? So like, on in real life, I don't make a lot of income, but I got a lot of things that can bring me income. So when I go to the bank, I'm not able to show the bank that I have much taxable income, but I can show them that I got a lot of assets. I don't think that it's possible. I'm not sure on this. If I'm wrong, feel free to connect me correct me in the chat. I don't think it's possible to be able to get a personal loan for a personal residence, for a home, based on the value or the assets of your business. Sure, you can get a business loan, but now you got to look at maybe possibly purchasing a whole different type of property that may be zoned differently, some type of commercial zoning or whatever. So now you can get the loan under your business to be able to buy this commercial property that also has living quarters in it upstairs. Like, you got to do a bunch of extra stuff if you're going to look at getting a loan for a place to stay in the name of your business. As far as I know, again, if I'm incorrect about any of that, please feel free to correct me down in the comments. So in my opinion, to answer the question that I posed at the top of this segment of the video, in my opinion, for me, it wasn't always better to pay less in taxes. All of the years that I paid less in taxes were also years that I tried to get approved for a home before. In the first 5 years that I drove for my dad, just getting paid, I get paid about $50,000 gross. And I was buying stuff, to do my job. So I wrote off everything that I could. And every time I tried to go to a mortgage broker or a lender, with the income that I was left with, the taxable income as a driver of someone else's truck, they were like, you don't make enough. That was the problem that I had. So in order for me to be able to get this house that we're in right now, the tax returns were based on the income that I was making as an owner, because I could never qualify for a mortgage, not based on my credit, strictly based on my income, 1099 driving someone else's truck. All right. So for some people, and last year, my tax bill, here's exactly how it happened. I went to do my taxes with my accountant. I paid the tax bill. He gave me the tax return, and that day we faxed it to or we emailed it to the lender, because we were like waiting for me to get all of my 1099s together so that I could file and pay my taxes for the previous year, so we could send that to the lender so he could use that for my income, right? So all that stuff had to be tight if I wanted to be able to go and buy a house. So this is something that you got to consider, okay? When you keep showing up to the table every year, 1099 driving somebody else's truck, and you're not paying much taxes. This is going to be for somebody that's driving their own truck as well, because I talk to a lot of people that are owner operators driving their own truck that say that same thing. Man, I don't pay much in taxes. I write off everything. And my question to them is always the same. Well, are you ever having any problems when you go to the lot to get finance to prove that you have income? Nobody want to loan you no money on no personal stuff if you are not dealing with profits. So all I'm saying with that is, you make it hard for yourself essentially when you say, I'm grossing 100, I wrote off 75 or 80, so I didn't pay much taxes. But now you might have a problem when you show up to a mortgage lender or anybody that wants to lend you money.